righty, welcome. Good morning, good afternoon, and good evening. Wherever in the world you are, welcome to the first episode of Palmetto Property Talk with your hosts, Will and Walker. Looking forward to talking to you today, Walker, and just being able to run some ideas of what purchasing a home might look like. I know we have a lot to talk about today. What is something you're excited for this year with the real estate market?
Well, we're seeing a lot of, the supply and prices are starting to come down, but I won't get too in detail on that as we'll talk about it later. But, going through it, I'm really excited about showing people that it's actually feasible to buy a home, especially with everything that's going on, because I know there's a lot of uncertainty.
Yeah, absolutely. I think there definitely is a lot of uncertainty, but I think we need to just address some of the issues that a lot of people are on the fence about when it comes to purchasing a home, especially first-time home buyers. And I think we've already hit on it. Today's topic is what first-time home buyers need to know when they're going out in the market. And we're just really excited to talk about this topic. I know it's very widely talked about, but I think if we can address some of the myths and misconceptions, it'll help people be put at a better state of mind and really know how to prepare themselves. So what is one thing that you're seeing on your end that's a trend? I know we're going to talk more about it. You said the uncertainty, but what are you seeing as trends here in Charleston when it comes to first-time home buyers, when it comes to the properties that they're looking for?
Well, really and truly, you're seeing a lot of new construction. So, for example, this is not in our slides, but the level of new construction that is being built is at the highest rate that it's been at since the 2008 financial crisis. And, not to put sort of, doubts in people's head, but a lot of what is selling is new construction. Mm-hmm. And then a lot of what else is selling is, the areas that are still affordable. You have a lot of areas that have shot up in price, especially if we've seen an influx of people moving to Charleston.
Yeah, absolutely. And, those areas, just for everybody to have a little context, would be Somerville, Ladson, North Charleston, West Ashley, Mount Pleasant as well, but there's not as much new construction. But definitely trying to get people into affordable housing is definitely an issue. But with new construction, there's definitely a lot of incentives that are out there. Exactly. But there still are a lot of like townhouses and condos and even single family homes that are out there that already existing homes that you can really get a steal for. We're going to go through some scenarios. I think that's going to be helpful for people to understand what that looks like and what they can afford. From the first scenario, I think we're going to talk about what newly married couple might look like and what purchasing, what they could afford. So I think we should get into a little bit of that and then just, questions I'm going to ask you since you're the realtor.
Exactly.
What areas are the best for somebody in that price range? And we're going to go through two scenarios today, but just excited to see, your insight. I'll be able to share some of mine. Let's get started with that. All right. So I know that we've talked about it, and I think we're going to put it right here on the screen. So we're going to have Alex and Sam homebuyer. So if you guys are watching this on YouTube, it'll be a lot easier for you to understand the scenario. Recently married, 25 and 27 years old. Both are working good jobs. Relatively recent college graduates. Household income of 80 grand. And then they've saved $20,000 towards the down payment and purchase of their home, and their credit scores are about 700 to 720. So this is, maybe cookie cutter for a lot of folks. They might be in a scenario like this where, hey, I have a relatively good credit score. I have $20,000 saved. What can I even buy when I make $80,000, combined with my wife? And that's something, a lot of people don't understand. There's so many options out there, and they think, oh, well, $20,000 isn't enough. There are so many programs out there, and just it's going to open so many doors for people with what we're going to be able to share today. So just stay tuned as we go through this. So Walker, let's go through the scenario for their goals. What would you say? I want you to just share a little bit of their goals, and then
Yeah.
also talk about what areas you think they might be able to live and get these goals met.
Exactly. So Alex and Sam, you know, newlywed, they don't have any children yet, but they have a dog, right? They bought a dog together. That's sort of their first child, as you put it.
Sure.
So one of their goals is to have a backyard for their dog because they want him to be able to run around, and it's good for the well-being of the dog. Also, as they grow up and have children, they would also like those children to have access to a pool or a community. You see a lot of those communities here around Charleston. So either a home or a townhouse, and Alex would really like only a 20-minute commute to work. So that is tough cookies in Charleston to only have a 20-minute commute.
Yeah, maybe without traffic, but
Exactly.
anywhere in Charleston, where are you working? Hopefully you're working right down the street or from home if you're trying to do that. Yeah, absolutely. I think this is a great scenario. It's the dual income, no kids.
Exactly.
The dinks out there. Yeah. That's this is this example. And also on here, they want to not pay more than $2,500 a month. They're currently paying $2,100 a month for an apartment in West Ashley. So they're looking for affordability, but not breaking the bank. So, what areas do you think they'd be able to afford just based off of that scenario?
So a lot of what is in that affordable price bracket you're going to see in North Charleston. You're going to see it north of there, Somerville, Hanahan, around just above 526. And then you're also going to see some of it a little further out in West Ashley. And then you're going to see, not a lot, but still some good affordable homes in either North Mount Pleasant, north of, the IOP connector.
Yeah, I think there are definitely a few options in North Mount Pleasant, specifically condos, a few townhomes that fit that price range.
Exactly.
For these folks. So now we're going to really just hit on what are they even pre-approved for? Because at the end of the day, that's what the brass tacks is. With higher rates, then comes lower pre-approval amounts, because that's just how that works. Because the higher your rate is, the less you're going to be able to afford. So here, we're going to kind of break it down. Also on the screen, you guys can see this too. So how much do they even qualify for? So, breaking this down as if they were college graduates, let's say they have 2 car loans. They got a steal for those car loans. They're only paying $150 a month for each. So that's $300 a month. Exactly. And then they're paying off their credit cards each month at $50. So then, the last thing is, a lot of people forget about student loans. They're like, oh, well, they're in deferral. Why would they be counted on my debt? Well, they're in deferral. They're not forgiven. That's a big difference. And let's say you have $40,000, like this scenario, in deferral, then it's calculated at half of 1%, 0.5%. So that would bring the monthly payment to $20,000. So total debt would be $550 before housing. And then, based off of a 6.25% rate, then we're looking at a pre-approval of $370,000 with a 3.5% down payment, costing them just below $2,500 at $2,498. That's estimated. Do not quote that rate. That is entirely for this scenario only. So just because this does say 6.25 does not mean that's where the rates are right now.
Yeah. So the rates will jump around, and that can really affect what you get pre-approved for.
Absolutely. I think a lot of people, they're like, oh, well, I want 3% rates. Hey, well, I don't know what rock you're living under, but rates are not at 3% anymore. That was during COVID. We're looking at a higher rate environment, but how do we overcome that? We have many different options, and taking advantage of an FHA loan is how to get a little bit lower rate and take advantage of the difference. If they did conventional, you're looking at closer to 7%. Then you're bringing down your pre-approval by maybe maybe $10,000 or more. So yeah, there's definitely a lot to be talked about there. So at $370,000, we talked about, okay, areas that they could afford. what even exists in that price range? So many people are worried about, oh, well, I'm only pre-approved for this amount. What can I even afford, in those areas? And I think you and I did a little research on that. And where do you think would be a best fit for them?
So given that they want to have a commute and they want 3 bedrooms, which is in that price range, you're more than likely going to be looking in either North Charleston or Hanahan, somewhere in that area right around where 526 and 26 junction with each other. But, we found this townhouse, for example, and, it's sitting right in North Charleston. It's right off the interstate, only a couple minutes, and has 3 bedrooms, 2.5 baths. And it's a newly constructed development, so it's a newer development.
Yeah.
Newer developments means it's typically going to be a little bit nicer. It has that backyard they were looking for. And the 2 stories, you're going to see a lot of older people typically not going for those homes because of the stairs. So that warrants a little bit less competition as well. So this type of home is geared for a younger couple.
Yeah, and I think we had priced this one out at, what was it at, like $320 or something like that?
Yeah, $320, $330, something along those lines.
Yeah, and if you guys see the pictures we got from that listing, really nice, built in 2022, fits the repertoire of what they are looking for. And it's about 20 minutes. I don't know if it takes into account the traffic. It
does not take into account traffic.
Yeah, but I guess on the weekend, if you're trying to drive to work, I guess that works. But I think you're right. So this was in North Charleston, a great community. There's a lot of development going on there, and I know that builders are offering a lot of incentives, but there's still a lot of ability to negotiate with sellers for seller concessions. And you and I are working on a loan right now that we're getting a very large seller concession to help our client be able to cover most of the closing costs, which is really great.
And buy down the interest rate, which helps his payment quite a bit.
Yeah, absolutely. That temporary rate buy down for a year, I mean, that's going to bring his payment down to like $1,800. So really great for a new construction, home, all things considered.
Exactly.
Yeah.
So, even if you buy those rates down for a year, you can still look at to refinance. You marry the home, you date the rate.
Exactly.
That's the classic setting.
Yeah, I think a lot of people are just get a little sticker shock at, oh wow, it said 6.5%. Okay, well, what if I can explain to you that there's a temporary rate buy down program that gives you a whole 1% off for a year, and while we're waiting for rates to come down, that saves you a couple hundred, maybe a couple hundred, but at least $100 a month towards your total mortgage payment. And that's life-changing for a lot of folks. And being able to negotiate the seller concession is so helpful, especially for clients like this. Then we're looking at from a $2,500 payment to closer to like $2,200.
Exactly.
So that's really awesome. And I think we have a couple other scenarios, or one other scenario to go through, and this is more so for people who have lower credit and also have a lower amount of income. There's still a lot of options out there to be able to afford the home instead of being raked over the coals with renting. And I think that's a good transition for us to bring up this second scenario. So I want you to introduce our fake buyer.
Yeah, so this one is Sophie Purchaser. She's recently divorced. She's a single mother. She has a daughter. She has a household income of $65,000 a year pre-tax. And then she has $15,000 saved to buy her home, whether that's gifts or personal savings. And her credit score, just a touch lower at a 620, which I think a lot of people are, in that squeeze, especially with, credit card debt and rising costs.
Absolutely. We're at the highest point of credit card debt in the history of America right now, over $1 trillion. So that's definitely very real. Not everybody has a 700 credit score.
Exactly.
So yeah, I think we can go lower than 620, just so you guys are aware. Over here at Lifetree Lending, where I'm at, we can go up to, or as low as 580 for FHA, as well as conventional and VA. There are manual underwrite options to possibly go a little bit lower on their credit score, but definitely, with 580 and above, that opens a lot of doors. When I worked at a bank, it was 620 was the lowest we would go, even though the guidelines said 580 and above. So definitely, this is a very doable situation. So there's one thing that I did want to bring up was down payment assistance programs. What have I told you about those, and what do you know about down payment assistance programs?
So I know that you have down payment assistance programs, and I know that, a lot of those can really help buyers come up with extra cash, especially if they don't have a ton of money saved. And I don't know any of the specific terms.
Sure.
I'm sure that's more your wheelhouse than mine.
Yeah. I think you being equipped with this would definitely open up a lot more buyers to being interested.
Exactly.
So yeah, there's so many different down payment assistance programs. We're not going to talk ad nauseum about it, but since I'm a broker and we work with over 20 lenders, we have one lender that has about 6 different down payment assistance programs that qualify for conventional or FHA loans. One of them is up to 5% of the total purchase price of the home. So, all right, let's take a step back. 5% is a huge deal. You can cover the down payment and most of your closing costs that way. The rate is a little bit higher, but you do pay for that because you're getting basically 100% financing on a new home. So that's a game changer for a lot of folks who really otherwise would not be able to buy a house today.
Exactly.
So that's something that I love trying to push to people and say, listen, you don't have the down payment right now, but this is something that can change your life. At 5% down payment assistance is amazing. And I think we can definitely hit on all of these and break them down in another episode. But yeah, that's one that's really helpful. And I know that a lot of the government agencies offer grants and a few other things. But the big thing is, what I have to offer is even more than what some of the government agencies offer for down payment assistance. So
I think that's really useful to a lot of people who, don't have large savings.
Yeah, absolutely. And I think it opens a lot of doors for you and for me and for the client to be able to, hey, otherwise, if we sent them to a bank and trying to get them pre-approved, kind of puts them in a really big conundrum where it's like, oh, well, I don't have what I need to cover the closing costs, because they might offer 100% financing, but they don't have enough for the closing costs, and that puts them in a big bind. And nobody's happy when you pre-approve somebody and they are short of funds. I can tell you that. For sure.
A big old headache.
Yes, it is not fun. Not at all. So, Sophia Purchaser. So we talked about our last client's goals. So this is what Sophie's goals are. Walker, do you mind just explaining a little bit of what her goals are? I know we put it on the screen here. I know she wants a townhouse and she wants access to pools and parks for her daughter, and she wants at least 2 bedrooms, and she wants to keep the payment, if possible, below $2,100. Where do you think she's going to be able to do that?
So a lot of, that Somerville, Ladson area. You can also find some stuff, North Charleston and Hanahan, of course. But a lot of those areas, provide a lot of really good options for less expensive homes, even if she doesn't mind having a little bit longer commute. But one of her other goals was to be close to her daughter's school, just to make that morning commute easier. That way she's not having to drive 10 minutes one way and then 40 minutes the other. Yeah,
absolutely. I can only imagine that would be not fun if you have to drive your kid 10 minutes and then basically drive 50 minutes to work. You'd have to get up at like 5 a.m. I already do that, but not with any kids yet. So yeah, absolutely. I think Somerville is a great area. It's really a great city. There's so much to offer there. I think so many people give Somerville a bad name. I know that I used to, because I'm from Mount Pleasant. Look at me, I'm a yuppie. But the reality is that Somerville opens a lot of options for a lot of folks. And, downtown Somerville is really nice. There's a lot of great restaurants. There's a lot of good schools in Somerville as well. There's just a great community there. From when I've been up there and had friends and we've hung out in different community spaces. So absolutely, I think Somerville and those other areas are good options for this buyer, specifically for Sophie. So, brass tacks we're talking about. What does she qualify for? I know it's always fun looking at graphs and talking about numbers. That's everybody's favorite thing.
Everybody loves.
I know. That's what I love, I guess. That's why I became a loan officer. So, on here, how much does she qualify for? So similar scenario in the sense of car payment, credit cards, and student loans. But just going to break that down really quick. So there's $200 a month on one car loan. Then we're looking at a minimum credit card payment of $100 a month. Then we're looking at student loans of $40,000. And once again, just so everybody's aware, that is calculated unless it is deferred or unless it is forgiven. If it is deferred, it has to be calculated into the debt pad, which I know I've had borrowers, well, I don't understand. I'm not paying on it right now. Well, this is because you're making a 30-year commitment to a mortgage company to say, okay, I'm going to repay this, and I have student loans, and they're going to take everything into account, including those student loans. So that calculation comes out to $125 a month. So that means her existing debt's $425 a month. And let's say we get her pre-approved at a 6.75% rate because of her lower credit score. Then we're getting her a payment of about $2,180. It's a little bit higher than what she hoped for, but this gets her pre-approved for $275,000 with a 3.5% down payment. So yeah, I think that opens a lot of doors for her, especially in those areas in Somerville and Ladson.
Exactly.
So what's even available in those areas in that price range?
So you can find a lot of older homes, in particular. Stuff that might need just a touch of work, but that's not something that Sophie's really concerned with. She's handy, good with a paintbrush, and a lot of those older homes, they provide great opportunities for people who are pre-approved for less money because they can get in the door for less money. And, if they fix it up, they can add value to the home.
Yeah, absolutely. And I think the other thing to keep in mind when you have a client who's buying a home like this, or if you're a buyer who's interested in buying a home that needs a little work. I don't know if I've talked to you about this, but have you heard about the FHA renovation loans or rehab loans?
I have heard about it, but I do not know any specifics.
Yeah, so they're great, so how it works, we also have construction ones. We can talk about that in another episode, but how it works is you hire a licensed contractor and you say, okay, these are the items that need to be fixed before I'm able to move in. And it's up to 12 months of interest only payments. So you're not living in there, but you're paying interest only payments for up to 12 months or 13, depending on the letter of occupancy. And what that means is, hey, this home is livable. I can move in now. So it's a great option for people to take advantage of if they want to buy an older home that needs work and they want to make it into that dream home. It definitely opens that door too, especially in Somerville, Ladson, North Charleston. Hey, you want to get a steal and you want to buy it for $275,000 and you want to put $100,000 of work into it. Okay, you're pre-approved for $400,000. Let's do it. So that's something that can build the equity immediately after the work's done. Yeah. So let's talk about this house that we found on the market that would fit this scenario.
Right. So it's in Victoria Place, which is in Sangaree, Somerville. That's the neighborhood. And, 930 square foot isn't a large home, but it still fits her requirements of having 2 bedrooms, one for her daughter and one for herself. Built in 1980, so not super old, but still old enough that it's, dropped in value just a touch, especially considering, this house does need a little bit of work, but it's nothing insane. 1 story, has a backyard, something for her daughter to play in. And it's only 3 minutes to the elementary and middle school because they're right next to each other, which is very convenient.
Absolutely. Yeah, that definitely fits her goal of having a short commute to taking her daughter to school and then being able to go straight to work.
Exactly.
Yeah, and then also having a backyard. I mean, I can only imagine not having a backyard as a kid. That would be, very difficult, but this would open also that opportunity for her daughter to be able to enjoy the outdoors too. So yeah, no, I think that's a great option. Also, one thing we had talked about at the beginning was townhomes. One thing we should definitely be talking about with our clients, you as a realtor and me as a loan officer, is hey, there are plenty of townhomes that fit in this criteria for both scenarios. So that opens more doors, especially if you're a newlywed couple, if you're a single person and you're trying to buy your first home. These townhouses are a lot more affordable, and you can live in them and then build that equity up. And let's say you want to keep it as a rental property later. Hey, let's get you in there.
Exactly.
So, all right.
Lots of good options for that.
Absolutely.
Yeah. So this next section, what we'll do is we'll go through sort of what the market is doing. These numbers are last month's numbers. We haven't come out with this coming month's numbers yet for April, but we're recording this as of the 2nd of May.
Yep.
So we're still waiting on the April numbers. Those won't come out for another week or so, but we'll walk through what the market's been doing historically, and then I'll have some infographics and a little presentation on townhomes in particular, which we've touched on.
Yeah, awesome. I think, going through what the market's doing right now so everybody understands, but, we want to make sure that we're not trying to kill you with walls of text and with
walls of numbers.
And walls of numbers, exactly, and graphs that you don't understand. I think the big thing is we're trying to explain, hey, there is improvement in the market. There are plenty of homes out there to purchase, and it's a buyer's market right now. Despite what some may think, it's a buyer's market because though rates are higher, homes are sitting on the market longer than what we have seen in the past 2 or 3 years.
Right.
So yeah, absolutely.
Starting to get back up to those historic levels of what is considered a normal market. I would say this is probably the first year in the past 5 that we've seen a normal, stable real estate market.
Yeah, and that's exciting. I think we're going to be on to definitely an interesting 2025 into 2026. If rates continue to come down, I know there's a bit of bouncing back and forth between higher and lower rates. And when we're talking lower rates, we're talking about 6.25. Hoping for 5s by the end of the year would be amazing. But yeah, I think as the supply continues to increase with the new construction out there and people who are locked in at those 3% mortgage rates, being able to digest, hey, okay, I can afford a 5% rate instead of 7. Okay, because that's a considerable difference between 7 to 3%.
More than double.
Yeah, exactly. So, I know you had a lot of information that you wanted to talk about. So, what are you seeing on the listing side as in volume that's really just been increased percentage-wise so people can understand what that means?
So a lot of our listing volume is active listings. You have a lot of pre-existing listings that roll over from the month. And this listing volume is taken as a snapshot one day at a specific hour. I think it is noon on the 15th of every month. And you look at how the listing volume tracks, and that sort of tells you what the supply is looking like. So we have a graph on the screen, and for those who are listening, our new listings, they come in and they add on top of the pre-existing listings, and that's how we get our total active listings volume. Right now our active listing volume is sitting just below 5,000, and that is an increase from January, February, where we were at our lowest point for the start of the year. That's pretty normal for the real estate market, considering that the holidays is not the time that people want to be moving. So you see people coming down and taking their homes off the market. You see a lot of the homes that were already on the market selling. And then as we go into the spring season, this is really the prime time for buying and selling a home.
Yeah, absolutely. I mean, this is traditionally the spring and summer are the busy times for our industry.
Exactly.
And what's been exciting, like you said, like we were both talking about earlier, is things are starting to normalize. And if things normalize with the supply as well as with the rates, then we're going to be in a good spot. It's going to take a while for the supply to get back where it needs to be. Talking about just a minute ago about the listing volume being so important to determining this what type of market we're in when it comes to either being a seller's market or a buyer's market. I think it's just really important, Walker, when we review this and just understand how this varies when it comes to rates. I think we talked a little bit about the difference in, 5 to 7%. I think the big thing is we need to better understand, okay, when are we going to be back to those normal levels of volume? What do you think? What are your thoughts on that?
So we're going to see a lot of those normal levels of volume probably sometime around the end of May, beginning of June, as we get back up to 5,000. I would say 5,000 is a good, healthy number for the past couple of years. Once we get past that point, we could dramatically see, this isn't a true forecast, but we could see a lot of, if rates come down and lots of people go home shopping for the summer, you could see a lot of houses go on the market.
Yeah, I think that would be exciting for a lot of folks to be able to have more opportunity, and for people who are locked in at 3% and they're like, oh, I can't move out because I don't want to pay, maybe $500, maybe $1,000 more depending on the size of the mortgage. But yeah, I think that's definitely the thing about the volume is if we can get back to that level, it's going to make it a much more digestible situation for buyers and people who are trying to list their homes and then buy another home. So yeah, I think then, we really need to talk about what absorption rate is. And I think the funny thing is this is not related to any sort of towels or sponges. We're not absorbing water. This is about home sales. So just explain that in a couple of sentences so people can understand that.
Yeah, absorption rate is sort of this buzzword that gets thrown around, or month supply, as some might call it. So the way to think of it is a pond, right? The real estate market is a big pond. There's a stream coming in, that's your new listings. And then there's a drain flowing out. That's your sales, your buyers coming in, people taking it off the market. So a lot of that absorption rate comes down to, how many months would it take to drain the entire pond? How many months would it take to sell the entire market?
Dying over here.
I know.
Like a frog.
Frog in my throat. Talking about ponds. But, that absorption rate, if it comes down, we're looking at more of a seller's market. And if it comes up, we're looking at more of a buyer's market. Typically what we consider to be an even balanced market is about 6 months supply. But back in 2020, 2022, that era, we were looking at like half a month's supply.
Jeez. Well, I'm glad we're not there now. I do kind of yearn for those days because it was a very busy time for real estate in general.
Quite
but
crazy.
Definitely a lot of people tearing their hair out just because of deals falling through, especially for listing agents and for sellers. But for buyers especially, they lost out sometimes and were paying well above the going price, sight unseen. So
yeah, I got in right at the tail end of that, and it was it was a bunch of frustration.
Yeah, no, 100%, man, 100%. So just so I want to make sure I'm on the same page with you. So absorption rate is how many months it would take for all of the current listings on the market to sell if no other listings were added, right? That's
exactly. If we dammed up the river going into the pond, how long would it take for the rest of the pond to drain?
Okay. That's a terrible pond. I don't want to be a part of that pond.
Yeah.
But yeah,
it's dry.
Yeah,
it's nasty.
Yeah, very dry, nasty. But okay, so that's great. I think absorption rate is something that people do need to know is when that number is higher, you're going to be in a good spot if you're a buyer. If you're a buyer. If you're a seller, what would you say how that impacts?
So absorption rate really will just dictate how fast you sell your home. Mm-hmm. And typically, the lower the absorption rate, the better the price you can also get because, it's basic supply and demand.
Yeah.
The more supply there is and the less demand, the lower prices go. The less supply and more demand side, the prices just start to climb. That's what we saw in, the COVID real estate boom, essentially.
Yeah, yeah, absolutely. So just so we're aware, again, the higher the absorption rate, so let's say it's 6, the better your odds as a buyer are going to be. The lower the absorption rate is, the better it's going to be for you as a seller. Yeah.
Exactly.
Okay, so cool.
It's the pulse of the market.
The pulse of the market. Here we are talking about bodies and bodies of water. All right. So I think then we wanted to talk about one more thing, was just the sale to list ratio. This also impacts the market too. I know we're talking so many graphs. We're talking text,
a lot of numbers,
okay, understand this graph with me. Like this is high school PowerPoint presentation time. But, this stuff is really important, guys. I think it helps you guys be better equipped when you are going out there to purchase your home. So, Walker, explain what's sale to list, that ratio, what that means, and how that impacts the market.
So, sale to list ratio, when you think of it as a percentage. So, if something lists for $300,000 and you have a sale to list ratio of about, let's say, 90%, which is pretty low. But 90%, you're going to look at 90% of the original home's value being taken off of the price. So 300,000, 90% of that, you cut off 30 grand. It's 270,000.
Yeah.
So really and truly, this will sort of show you what price is average to take off. Right now we're looking at a sale to list of around, 98.5. We're sort of jumping up and down. We were lower than that back when the market was a little more normalized, back prior to January, February, those holidays where nobody really wants to move. And then the big number, though, to think about is the difference between the gold and the black lines, right? So you have a sale to list price ratio. That means the price as it was on the MLS when they made an offer versus the sale to original list price ratio, which also takes into account price cuts. A lot of people, they get fixated on that black line. They get fixated on, what was it listed for when I went and looked at it,
sure,
in comparison to looking, all right, they've already made 10 grand worth of price cuts.
Yeah. Yeah. I think, so I understand too. It's when you have this sale to list price, you're taking into account, okay, you said if it's at 90%, which would not be a good market for a seller.
Exactly.
If you listed your house at $300,000, then you're going to end up having to cut it by $30,000 in order to sell that home.
Exactly.
Probably. Okay.
So, and then another thing though, for sellers, this is a tactic that a lot of real estate agents use, is what they'll do is they'll overvalue the home originally and then use systematic price cuts to make it, to help attract buyers.
Sure. I think the big thing though, if we're talking about our first time home buyers, is when we're looking at this, how do these ratios directly impact a buyer who, previously knows nothing about real estate? What should they know about this, and how does this impact them when they're trying to look for homes?
So really this is more of a spin-off number from the absorption rate. The higher the absorption rate, the lower this sale to list ratio will be. So for first-time home buyers, the biggest number I would say to keep your eye on is that absorption rate. And then, if we look at sale to list price ratio, that'll give you a more in-depth look about, where prices are heading. It functions a little bit more like a forecaster than the absorption rate does.
So this is a lot more in-depth to say, okay, here's exactly what we're looking at. If we're looking at a 90% sale to list price ratio, that's a buyer's market.
Yes.
100%.
That is a heavy buyer's market.
Okay. So that's something you guys, just so we're all on the same page, super easy to understand in one sentence. If you have a lower sale to list price ratio, it's a buyer's market. It's time to go as a buyer. The higher it is, the more competition you're going to be fighting for in that price. And it's going to be hard for you to negotiate down.
Exactly. And like 2020 to 2022, that little COVID boom, we were seeing 110% list price ratio.
Yeah. Okay.
So that was a very, very heavy seller's market.
100%, because there was such a limited supply, and then everybody and their mother was out there. I've got 3% of an interest rate. I can afford X, Y, and Z. Okay. Well, now we're at 6.5% market. So
Yeah.
okay, what does this look like now? And I think what we're seeing right here is you said it was at 97, 98.5.
Yeah.
Okay, so it's a buyer's market.
It is leaning towards that buyer's market. We're a little more balanced. This is about a balanced list to price ratio. So even though our absorption rate is not up to 6, the list to price ratio indicates that this is trending towards a buyer's market.
Okay, so this is a good time to buy, guys, is what we're trying to explain to you. As a first-time home buyer, we've talked to you about townhouses as an option. We've talked to you about down payments assistance programs. We've talked to you about what you can qualify for. And I think the big thing that you guys need to do is, if you have questions, comment, shoot us an email, or just give us a phone call. We'll have our phone numbers if you need them on our website.
Also down here in the banner.
Yeah, in the banner, our information's there too. And we're here to help you guys. We're not just here to sell you something. We are trying to add value and see, okay, you don't understand. Let me make it easy for you to understand and help you along in this process. I don't care if you're 6 months out or a year out. Let's talk about how we can get you ready to purchase a home.
Exactly.
Absolutely.
Get there in that train to building wealth.
Exactly. You don't want to keep paying rent. You're paying, a lot of these large investment companies, but if you've stayed in an apartment and you're paying $2,000 a month, you do that for 12 months, that's $24,000 that you're paying somebody and you're building no equity.
Exactly.
So let's get you guys into some different options. And if you have questions, like I said, reach out to us. We'd be happy to talk to you and pick your brain. We'll answer some questions in our next podcast. If there are questions, we will try and highlight one of those questions each time we have one of these episodes. But guys, thanks for stopping in today and listening in. We look forward to talking to you again next time. We're going to try and do this once a week if possible. If not, we'll just do every other week or once a month. But you guys have a great day. And once again, have a good morning, good afternoon, or a good evening wherever you are.